Hello guys, this video is for those of us who are interested in trading price action. This video is specifically meant for those who are interested in trading price action. Now, in going into the trading of price action, there are three different aspects that you must be able to capture for you to be able to trade price action. Number one is that you must be able to recognize the structure of the market. And number two, you must be able to identify the area of value. And then number three, you must be able to identify entry trigger. These three is very critical, very important for you to be able to trade price action. The pair that you have here is Euro USD daily chart. And looking at the trend, looking at what has transpired so far, you agree with me that price has continually been moving up, but most of the time down. Okay, so you have where price will come down, you have a swing, then you have a retracement. Okay, then you have a swing down, then you have a retracement, you have a swing down, okay, and then you have a retracement. So the impulse move usually are larger from what you're seeing here. And that is where you will then confirm with me that this particular market has been on a down move, okay, creating higher highs and creating lower highs and lower lows. And when they say it's creating lower highs and lower low, is this high is lower than this, okay? And then this low is lower than this. So the market structure for this particular instrument, for this particular currency pair is creating a lower high and a lower low. So once you identify the structure of that market, then you can then zoom in to get an area of value. So it is important that we understand that in this market, you don't buy or sell at the prevailing price. We seek to buy or sell at a discount. In other words, we seek to buy when the market must have retraced. There is a prevailing value of a particular currency at a particular time. For instance, where it is right now, it is at a particular value, and the current price is 0.9817. For us as a price action trader, we seek to sell this market at a discount. So when we say at a discount, we expect that there will be a retracement to a certain level where we'll be comfortable when we say we could have value at that particular point, and then we can be able to enter the market in line with the trend. One of the things that we use to gauge our area of value, having understood that this market structure has been creating lower highs and lower low, is to look for areas of support and resistance. Okay, you agree with me that price having broken down came to this level and then bounced a little and then got to this level, okay, and then was pushed down further. So you agree with me that this area is an area of support. Okay, so what you can do is to map out the lowest point as price continue to proceed downward. Okay, you can see this area being a support area, price came to that region and reversed back, came to that region again here and reversed back. Okay, came to this region, reversed, but was pushed through that area of support. And then what happened is that having gotten to this support area, was pushed back and then it retested that zone. In other words, this zone that was an area of support, okay, previously, over 3 times now, is now an area of resistance to price. So you agree with me that on a good day, this is our area of value. Okay, we seek to enter around this zone. Okay, and then looking at this low here, this particular zone, okay, we say this is an area of support too. So we can pick that zone and say, okay, here's an area of interest to us. Okay, so you can see that when price came back to that zone, it bounced, came back, bounced before eventually it was pushed down. All right, and then having gotten creating a lower low, went back to that region again, and then it was rejected. So this is our area of value, okay? And we seek to sell, having seen that the structure of this market is a downtrend. The structure is producing a downtrend for the market. So we seek to buy at a discount. As a trader, you ensure that you buy or sell at a discount. It is very important. And that is one way that you can overcome the fear of missing out. A lot of people will see the market moving, and at the prevailing price, they want to jump in because of fear that they might miss out on the opportunity. The market is full of opportunities. All you need is to wait and be strategic in your approach. So it's important that we are able to pick up these support and resistance areas. Okay, as we move, it is important you identify those zones. Okay, you can see price came here, bounced, went back to this area of former support, now a resistance, came down, and you can see this zone and this zone seems to be a support there. Okay, you can see price came, bounced, went back, came around to that zone, bounced, then it was broken. And you can see what happened. Price later came back to that zone again. So how beautiful it is for you to buy at a discount. You wait for price to come to you. You don't rush after the market. You wait for the price to come to you, and then you can be able to pull your trigger. Now, it is important to note that this same concept is available on all the time frames. The way you see it on a daily time frame, it is also available on 4 hour, is available on 1 hour, is available on 15, 5 minutes. Any time frame, you will always see the market continually give you an impulse and a retracement. So it is your duty to be able to map out those areas of value, those areas that will be more safe for you to enter either a long or a short trade. All right. So it's important you have that settled. Okay. I don't want this particular video to be more than 20 minutes. So I'll go ahead and share my screen. And the next thing that you need to do, having understood the structure of the market and mapped out your area of value, then the next thing that you must do is to look at the interpretation area of entry, your trigger. And the trigger comes down to your candlesticks. It's important to be able to interpret the candlestick patterns that you see in the market as it forms. Okay, you can see the candlestick here. Okay, this is a bullish candlestick. It has an open, and then it came down to this low with this shadow here, confirmed that price was pushed down to this level, and then eventually the buyers came and pushed price up to this high, and then eventually closed at this level, at this price within that time frame. Please note that this is available also on a higher time frame, daily, weekly, monthly, 1 hour. Each candle activity reflects activities in the market for that time frame, either for 1 hour or for 4 hours, for daily. It's just a reflection of the market activities. Okay, so For a bearish candle, it means that it opened higher, it opened at this level, and then price was pushed up, okay? But seller came and pushed price down to this low. But eventually, before the end of that time frame, it closes here. So one thing you must identify is that with bullish and bearish candle, there is always an open, high, low, and close price. Okay, so and then the longer the body, the more activities within that time frame. Okay, so it's important you identify that. And one of the very important candlestick pattern that we must identify is a hammer. The hammer is reflecting the fact that there was activities in the market, price was pushed down at a particular point, but eventually before the end of the close of that time frame, buyers came and pushed price above the opening price. And so that's why you see this very long shadow, all right, with a small body. Okay, so the long shadow at the bottom, and then giving you a shape like a hammer. In fact, that is where it got its name from, a hammer. Okay, so the buyers dominated the market at this point. And this particular candlestick has a lot of implication for us traders when we see it after a long trend or a downtrend, and at a level it reflects this particular hammer. It shows that now the buyers are coming to contend or to take over from the sellers. Okay, so it's important to know that. Now, another pattern you must look for is bullish engulfing. This is a reflection that there's a change in strength, or there's a change in trend when we see it on a particular level. So it's important you note this. It shows that sellers were in charge, pushing price down at a particular level. Okay, then buyers came almost immediately, pushing price up, but this time it closes above the opening price of the previous candle. So we call this bullish engulfing, which reflects a change in who exactly is in control of the price around that time. Sometimes you have what we call railway track, uh, where they are equal, okay, or almost equal. But this particular one is called engulfing. Okay, they all reflect, okay, a change, a price reversal. All right, a change in the direction of the market at that time. So here's how to recognize it. The first candle has a bearish close. The body of the second candle completely covers the body of the first candle without taking into consideration the shadow. Okay, the second candle closes bullish. So it's just a description of a bullish engulfing. And this is what a bullish engulfing pattern means. On the first candle, the sellers are in control as they close lower for the period. On the second candle, strong buying pressure stepped in and closed above the previous candle's high, which tells you the buyers have won the battle for now. In essence, a bullish engulfing pattern tells you the buyers have overwhelmed the sellers and are now in control. All right, so it's important you understand that. And if you put this side by side, you will see where the pattern hammer came from. Okay, that you have a bearish candle, but now you have a bullish candle that is longer than the bearish candle. You put this side by side, what you have exactly is a hammer, which is a reversal candle. Okay, it's important that you're able to interpret it as well there. Then we have a shooting star. Now, the shooting star is also a reversal candle, but in this case, there must be a previous uptrend. Okay, when you see a previous uptrend and then you now see a shooting star, it reflects that the sellers are now, coming in to take over the market. Okay, so the price closed lower, despite the fact that it actually went up, before the end of that period. Okay, so the sellers came and took charge of the market. Okay, and then bearish engulfing, okay, is also a reverse of bullish engulfing. In this case, you have the buyers coming in to have been in control of the market, but the sellers came in and then took charge of the market and caused the price to close lower. All right. And so we can see the reflection here in all the reversals. You observe that you always have bullish engulfing, okay, or bearish engulfing. Okay, if you take it from here, you will see when price got to this level, this candle, okay, covered this whole candle and then extended below it. And from then you see that price continue to go down, okay. At this region, on reversing, was the same thing. It came up, and this region, you saw what happened. Okay, this a bearish reversal, push price down, got to this level. You can see what happened. This is a bullish engulfing, boom, and then like that, you saw price going up. Of course, this is not bearish engulfing, but like I told you, there's what we call piercing pattern. Okay, it is not totally the same, but almost like the engulfing. Okay, you can see this piercing pattern. Now you can see the shooting star. Okay, and then price push down. Okay, and then you see what happened? Another shooting star. Okay, at this region. Since we are interested in buying, you can see where you can buy. What happened? After price got to this level, breaking the market structure, it's been giving us a lower high and lower low all the way from this region. But breaking this structure, this price coming to this level has broken the structure. So it reflects that this downtrend has come to an end. Then price came down. You can see what happened. Came down and bounced on this particular former resistance. It's now turning to support. Okay, and then came up, we have a shooting star, came down again. Now, as a trader, you must also be able to observe, giving you a double bottom around this zone. And then what you have is now what? An engulfing, boom. So this region is your area of value, okay? After identify your area of value, you wait for a bullish engulfing or a hammer, any of the reversal candle, and then that causes your trigger. You pull your trigger at the close of that candle, and you expect that price will continue to go to the upside. So this is a very fantastic way for you to trade and then trade profitably. You enter a long trade here and you put your stop below that region and you expect that price will go to the upside. Most of the time, you can enter a trade and then you target 1-to-2 risk reward ratio. So it's important you're able to identify that. You can also see here, having seen the structure price going up, this area having been confirmed as area of support before, you can see price came back to that area and then boom, you have, first of all, a small body rejection candle, and then you have your engulfing candle, and then you expect that price will continue to the upside. Okay, so that's how far we'll go in this teaching. We're supposed to go on the chart to see some of this and reflect. But it's important that you understand this concept. You can see, all right, price have been creating a lower low and lower high. In other words, this high compared to this high, you will agree with me that this high is lower than that. So also this low is lower than this low. And so the market structure is a downtrend. And then if I've been able to identify this area as a resistance area, price came back and retested that zone. Boom, you saw it. A rejection candle and then bearish engulfing that is your trigger for a sell in order to continue the downtrend. Okay. If you trade like this, I tell you that you will make serious profit while limiting your risk. Okay. I do not promise you that you're going to have 100% success, but I tell you that you will have very small losses and then big wins. And then what you experience is your confidence level will rise because 7 out of every 10 trade that you trade in this manner will come out successful. Okay, so it's important you are able to see this way. Okay, look at the market structure here. I've been giving us higher high. Okay, and then you can see those areas marked in red, areas marked in black. Okay, these are just the swings. Okay, because we know that our intention is to buy at a discount. The surprise came here, bounced, went up, came back to the zone, and then it gave us an engulfing pattern around that same zone. This is our trigger. Okay, boom, you buy. Okay, expecting that whatever it is that you have risked here, you should get double of it. Okay, so this is a fantastic way for you and I to trade and to trade successfully. Like I said, you will see this pattern evolve in 15 minutes, in 5 minutes, in 1 hour, preferably. Okay, and then 4 hours daily, fantastic. Okay, the only difference there, you have to wait when you go to a higher time frame for these patterns to manifest. Exactly what we say. Okay, so you see the area of support. Okay, these are the area of value. And when you see the trigger, which is the engulfing pattern or the hammer or the railway track or the piercing pattern, these are a pointer for us to pull our trigger and buy or sell in line with the overall trend. I hope I have been able to share some insight for you. If you seek out to see double bottom around the zones of value, this area of value, you seek to wait for double bottoms, and then immediately you see the engulfing pattern or price reversal pattern, you move, you enter your trade, you're going to be having profitable trades. You're going to be having huge success in your trading. Okay, so let's see on the chart 1 or 2 examples so that I can quickly wrap this up. Okay, so this is an engulfing candle. Okay, let me see if I can zoom out. Okay, you see? You can see this, 1, you can see this, 2, you can see this, 3. All of these are engulfing candles around a zone, okay, the area of value. Okay, you can see this shooting star. Of course, this is a higher time frame. This is daily. Okay, so these are things that you encourages you to pull your trigger. All right, so it's important. On a lower time frame, the same thing you will see, okay, manifest. The same thing over and over. Okay, there, I just remembered now. Okay, there are some trades that I took. Okay, you can see area of value, having understood that this is an area of support before to price. Price came that zone and struggled. Now price has gone back to that zone. Okay, and having seen this shooting star, okay, I had no option but to sell. Okay, and you can see what price has been doing ever since I sold. Okay, you can see, okay, I've made currently how many? 130 pips averagely now, and it's still ongoing. Okay, I expect price to come to this region. Okay, so that is that. Okay, so you can see this engulfing pattern. Okay, but we don't encourage you to trade against the trend. But in this case, you can see what happened. This is a former support, and then price came to that zone and then bounced, creating a double bottom. Okay, let me zoom in so that you can see. Okay, you can see price have been bound, bounced on that region and then bounced here again. So it's important. You see this? You see this? Around the same region. Okay. You see? The former support area. Price came there, bounced. Came here, gave you a shooting star. All right. The same thing here, an engulfing, and then boom, price went down. Okay. So using this strategy, I'll tell you that you make consistent profit. All right. So you have a wonderful trading experience. I wish you the best. Okay. Understand that you must, first of all, identify the market structure. You must be able to identify your area of value and then see your trigger and then before you enter your trade. If you are systematic in your approach with patience and consistency, be disciplined to follow the trading plan. I promise you, you will come out successful. Do have a blessed trading experience.